this market doesn't feel like a market of trends, but more like a market of one-off transactions. I'm Tony with Clarkson Santoro, and this is your real estate update for the week of Friday, May 16th. We know that selling or buying a home can be very stressful and confusing. That's why we do these videos, so you can know how the market is impacting your options as a home buyer or seller. As always, we like to start off with looking how the past week has done. There are 75 homes on the market now, which is 2 more than we had last week. Average asking price is about the same, $1,969,000, just down $2,000 from last week. Only about half the homes went pending this week from last week. Last week being the best number of single-week pending sales we've had in months. The average asking price for those homes is also down to $2,039,000, which is more than $200,000 less than the average asking price of the pending homes last week. 3 homes closed this week, 5 less than last week, but the average closing price is up significantly to $2,026,000, up from the $1,788,000 we had last week. So now that we know how the market performed this past week, we can look at the broader trends, even though I said this felt more like a one-off market than a trend market. But before we do that, if you find this information helpful, why don't you hit the subscribe button down below so you don't miss out on future updates. And you can also share this with a friend, because I think everyone deserves to be in the know about their local real estate market. Okay, let's look at those trends that I was talking about. Starting with inventory. Inventory has remained pretty stable for the past 4 weeks, hovering right in the 75 homes mark. While sellers would prefer to see this number come down, I take it as a good sign that it's stayed pretty stable. With the softer market, it would be very easy for this to just keep climbing more significantly. The fact that the inventory level has leveled off despite the slower turnover means we're less likely to see home values drop. As I just mentioned, the turnover rate has remained relatively slow for months now. It has improved recently and now sits at about 50%, but as you can see, it's been very low for months. And that 50% is much improved from the 30% turnover rate we had last month. Obviously, anything under 100% means that savvy buyers can wait for a home to sit on the market for a few weeks and then offer less than asking, and usually make that purchase work. The over-under number continues to perform well, however. It remains floating in the $10,000 to $15,000 over asking price range. While that's not very high, that is more than the slow turnover rate would typically indicate. Homes that show well and are priced aggressively continue to sell quickly and often with competitive offers, driving the sales price to be over the homes that do sell driving the price to be over with those homes that sell within the first 2 weeks. The average sales price dropped sharply after a big spike we had a couple weeks ago. That $200,000 increase in the average sales price was a bit of a false flag, though. There were a couple of Norris Canyon Estate homes that had closed close together, and with the low sales volume, that artificially inflated the whole average for San Ramon. The average is still comfortably over $2,050,000, which it's been kind of floating in that range for several weeks now. In fact, it's been about 10 weeks. The Triple Q Fund had another banner week this week, closing 5% higher than it did at the end of last week. This continues the month-long trend of consistent recovery from the panic sell-off of the stock market saw at the beginning of last month, when the tariff talks really ramped up. This fund will always help to increase the funds available to the majority of buyers looking in the San Ramon area, as the majority of them work in the tech sector and have a lot of their cash in the tech funds. Unfortunately, despite the market recovering quickly from the trade war and inflation numbers looking better, the Federal Reserve remains hesitant to cut rates. As a result, the average mortgage rate has remained steady in the high 6% range. It bumped up a little bit, in fact, this week, up to 6.8% for the average 30-year mortgage. And those higher rates continue to be one of the biggest factors in holding this market at its sluggish pace. This week was nothing special. It didn't move the needle much one way or the other. The 30-day average is back down a little, but still comfortably over the $2 million mark. Pending sales came back down as well after hitting the double digits last week. But the over and under number continues to show that homes priced right and prepared nicely are continuing to get quick interest from multiple buyers. This is not a market of trends. This is a market of one-offs. It feels like every house is so completely dependent on its own strengths and a less than perfect product can't skate by on buyer desperation like we have been able to in this most recent past. Thank you for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button down below if you'd like to stay informed on how this market continues to shape up as we head into summer. And if you have any questions about how you can specifically navigate this stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and we'll see you at the end of next week with a new update.